And now it's time for the Doc and Pimpy Show with your host, Doc, and the man who should be committed, Pimpy.
Welcome to the Doc and Pimpy Show. I'm Pimpy, and that man over there is Doc.
Doc.
Gunther, sir, welcome aboard.
Yeah, thank you. I appreciate it. Let's touch on the economic portion of this, and it'll, I think, further bring context to solutions, kind of where we're headed. This is probably the most important thing,
okay,
other than, showing examples, of course. But so I'm going to do this. I think we're all well aware that we're experiencing hyperinflation.
Oh, yeah.
I don't think people understand the extent of how widespread it is. And so there's different types of inflation. There's price inflation, commodities inflation. Well, there is no such thing as transitory inflation. So what's really interesting about this, right, is in places like Japan where you have negative inflation, which is not a good thing, by the way. That's just the way the debt parity system was set up. And then Argentina, where you have over 51.9%. If you take a country like the United States, which claims to have it's about 6 to 7%. That's a very
13.
misleading number.
Yeah.
Okay. If you look at the commodities index on Bloomberg, you will notice that on average, we're looking at over 67% inflation just in aggregate on all the things that we need to build or to supply food or whatever it is. Commodity, right? Inflation on commodities. That's the real tell-all. And obviously with supply chains in flux, again, here in Florida, we have ports. We're in really good shape. We also don't export a lot of goods. So we're really lucky here, but other states and other countries, not so much. So if you look at it this way, what we want to achieve in this, what I call non-inflationary value, right? So obviously inflation occurs when there's a spike in products and services on the pricing side, but purchasing power of money decreases. And then of course, deflation occurs when there's a general reduction of prices in the economy. And there's some downside effects to that. So not everything is overly expensive. It's the things that tend to matter that we use to spend that no longer have any purchasing power. So what's interesting is hyperinflation leads to asset deflation in some areas. So you have hyperinflation on physical goods, and then you'll get a deflated mechanism with digital goods. And so what we want to do is stabilize the assets. That's a really important thing. And economists don't talk about this because they're looking at everything through the lens of money. Central bank money, right?
Well, for us, it's gold and silver. We talk a lot. I do on one of my shows is gold and silver all the time.
Yeah. So that's another good point. So with gold and silver, right, we know that they're valuable things. Bullion, at least.
Yep.
We know that they're price rigged, and they're price rigged through the paper that's being pushed through these contracts on the exchanges, right? What they do is they push the paper, right, and then they rig the price, and then they trade the volatility amongst themselves, right? So the end consumers, such as us, don't get to see any real increase in value, even though I don't think that's going to last. I think that whole game is going to end pretty soon.
Oh, it's going to end. I mean, I don't know how many more tricks they can use. What I relate it to is like taking a beach ball and you hold it underneath the water. You can only hold it for so long. Eventually, it's going to pop up, and I think we're getting there.
So I think the best way to describe where we're headed with economics and where we need to go is from a very fundamental level again, right? And so if you look at the shift in computational modalities, I'm just talking about the use of binaries or binomials, right? And where we're headed with polynomial values, which also exist in prime numbers. And then we get to holonomials, which is root primes, which is more of the next stage of a quantum-based type of security, if you will, right? What we know is that we can also, there's a way to reset finance. So it's very simple, actually. With interest, there's a counterparty baseline. There's a thing called present worth revenue and expanded net present value. These are real computational frameworks. These are literally power algorithms that allow you to determine how these things work, but they become very complicated. So what happens over time is you get into more derivative versions of these things that compound the debt, and the interest basically has nowhere to go. So basically, we're at a stage now where inflation has nowhere else to go. Okay.
Yeah.
So we're either going to wipe away a bunch of debt, which is going to happen. I think there's going to be
debt reset. Yeah.
a form of a jubilee.
Yes.
And then without interest, we can deal with a counterparty baseline that's 1-to-1. This is real. We can do this. I just gave you an example of an NFT that does that.
Yes.
We have a present worth value, which is 1-0 plus, which is a form of a quantum computation, and then an expanding network value where you have sigma values that are assigned to root primes or natural numbers, things like that. Okay, so I'm saying all this a little bit rhetorical language, but the point being that, like, it's not hard for us to start over and reset everything that we do computationally as we do it, right? And that's what decentralization represents.
How close, in your opinion, because I think it's unavoidable that we are to a debt reset.
Well, I think we're going to see radical changes in the next 5 years. And I would say even within the next 3 years that we're going to see a significant shift into asset-backed cryptocurrencies and other things because of this. It can't hide anymore.
Nope.
It's always been hidden in taxes. Well, that's not working either, right? As Thomas Sowell pointed out.
Yeah, I love Thomas Sowell, by the way.
But this is about assets. You guys nailed it earlier. This is about preserving assets, natural assets, stewarding them responsibly. And so when we ledger, for example, a commodity that's produced in one location versus one that's produced in another location, we amortize the risk, okay? If I grow corn in Iowa and another person grows it in Missouri, okay, we have different variables and different conditions, but the way we amortize the risk is by putting it on a ledger and managing the supply chain and the logistics flow of that asset. Same goes for other types of systemic risk amortization. It could be anything. It could be crude oil and natural gas. It could be other forms of commodities. And of course, multiple commodities with multiple variable sets are produced in different locations. When we're amortizing those risks, then we can determine their actual value. We're not purely speculating all the time.
That was my question. What does that do to the overall value when you have that kind of information?
You have real value. If you, again, this goes back to a physical asset with the accurate metadata representation, right? And that becomes an NFT or even other type of financial instruments. It could be a crypto bond, which is something that we've worked on as well. Mm-hmm. Look, when you have real asset representation, you're not taking on the same kinds of risk.
So is there any way to manipulate it or change it? You know what I mean?
No, not with the way we're designing the new systems, because I'll give you an example with the SDGX exchange. It's a new form of an eco credit, right? It's not the traditional carbon credits that were, totally gamed and fraudulent and all that stuff. The way we design the system is you can't commit fraud. You can't multiple spend on it. You can't do any of that stuff. That's the power of encryption. Yeah. That's the whole point.
As a person that's a major holder in both gold and silver, you can understand why I feel really happy about this information.
Yeah, and it's funny, Lee, because I told you the other day, like, I don't own a lot of stuff anymore. I don't even hold a lot of money because I keep everything in my companies, and a lot of it is off ledger, meaning it's still accounted for. Like, I'm not dodging taxes or anything, but I don't want to own a lot of stuff right now. I'm going to wait for things to just blow up and then start over and pick up the pieces from there. Why would I buy anything in bulk, land, anything?
My concern is, of course, bail-ins. They're going to take people's money, but here's something we're talking about is values of the house are really high right now only because of money that has no real value. Sell it for that dead fiat dollar, invest it into gold and silver, and just wait for us to get on the other side, because I'll be able to buy these same assets for maybe less than half of what they are right now.
Yeah, so, I mean, look, I'll just show it to you.
Sure.
We'll just cut right to the chase. I mean, this is kind of my framework right now for how I'm doing this. So this is my risk hedge profile for a 10-year downslide in the economy. And it's based on what Kyle Bass and other people call chain-weighted or non-transitory variables with inflation. Nice. Like externalities would be one of them. Like you have to factor in externalities to assess what real risk is. And then anything that you would invest in should be a hedge against inflation.
You talked earlier about the asset-backed crypto versus the net-backed cryptos. And I love the fact that you put in lower risk, long hedge, and then high risk, short hedge on those two alone. Everything else makes perfect sense as in normal investment. But those two, great categories, by the way. Why 2020 on those two?
Those are approximations, right?
Okay.
I mean, in reality, my portfolio, it's not that more extensive than this.
I wasn't trying to push you on the percentage.
No, I know.
As that you've got both of those. In my thinking, it would be, I would think I just dropped the high risk one. Okay, but I'm older. So
see, for me, precious metals, I got like 90%, 96% of my money is in precious metals. I don't trust anywhere we're going. I do have cryptocurrencies. Some of them are a little bit more riskier than others just because it's a gamble, and I know it's a gamble.
There's something like, 4,800 cryptocurrencies out there now.
6,000.
I think 9,000, or I don't know how many there are in total, but let's say 95% of them go by the wayside at some point because they don't really differentiate. But you do have things like Ethereum, and you have Ethereum 2. And Ethereum is a great investment simply because it's the most robust developer network in the world. Oh, yeah. And you're building real applications on top of it. And, it has its flaws, but it works and it's progressive. So you see a lot of these cryptos are and that's fine. Speculation is fine. It has its place, of course. Sure. But the point is that you don't want to speculate the value of your crypto out of the market. There's no reason to do it, right? So now with our technology on Rare and the NFTs, and we're going to go to the exchanges and all that stuff, but we're building all of our value into the token itself. So when you buy a Rare token or you mint one, you have access to a network and you have access to a full stack of technology that's already developed. We intentionally did this. We were not going to go to market with something that wasn't built. We weren't going to just flip a token and say, oh yeah, the technology's coming. Here's the white paper. We weren't going to do any of that stuff. We wanted to get into revenue and we wanted to prove it out and we want to build real value and we want to stay private. We don't need to go public with this. We don't need anybody joining our board and telling us what to do. Sure. We're not doing any of that shit. So that makes a difference. So the net-backed cryptos, they're not going anywhere. That big handbasket of cryptos is going to shrink. It'll become more and more obvious which ones have real utility. And then with asset-backed cryptos, like I said, you're talking about not just the NFTs where you have an asset transfer of value, but you have agriculture and energy utilities. There's all sorts of ones that have really, Regen Network is built on the Cosmos SDK. That's a legitimate asset-backed crypto or token, really.
Have you heard about these gold-backed cryptos?
Axia is another example. A guy I just talked to down in Miami.
What about pesos? Have you heard about them?
I've heard. Yeah, they're all legitimate. I think anything with a real physical or fungible treasury, which is what Axia has, right? Is something that's going to have legs. Now, what Axia does is actually pretty cool. They have their own treasury, a private treasury of precious metals. I think they have gold, silver, and palladium. They have bullion in the treasury, real stuff, right? So that backs it in the treasury. And then what they do is they have about 68 million tokens in circulation. And then there is a staking program where you stake at a value of par value of 14% interest or higher. I think it goes up to 192%. But the more you stake yourself, you generate a token and then you burn a token. So what it's doing is it's limiting that supply as it expands.
But they're also paying you in interest better than any bank could ever do.
That's correct. Yes. Well, you're getting paid interest, period, which banks don't do. Look, you just have to remember there's really no such thing as a stable coin that is not backed by a physical handbasket or a treasury. It just you can't stabilize something and value it in fiat and call it a stable coin. Sure. It just doesn't, right? It's the Tether problem. Tether, Bitfinex. By the way, those are tied to Evergrande or Evergreen notes, right?
I just warned people about that.
Exposure is going to affect, the crypto market big time because there's a lot of parity, right? These things are not isolated, right? So, you got to pay attention to this type of stuff. And then, with cash, this is a really interesting one. It's a slow risk short hedge. And a lot of people say, well, pull all your cash out of the banks. I don't necessarily disagree. I live in Florida, so I don't go with a big bank. And I feel somewhat protected. In my opinion, we're going back to a US dollar, digital dollar, which will be a treasury-backed type of note. And the rationale is any cash moving out of equities also outperforms those equities, save for like a Tesla, which is a hypergrowth stock that's going to go to like, thousands and thousands and thousands of dollars, like from, and it'll probably split. But that's a rare thing. Tesla's a real company, and, they have a real technology and all that stuff.
Elon Musk's buddies created the Nexus, which is they're talking about a platform that is ran on satellites. It's untouchable.
Last I checked, I know that they were having quite a bit of problems with the satellite network. I don't know if that was partly due to other satellite interferences and a host of things kind of happening in sort of the military apparatus. I'm sure it had a lot to do with it. I think one thing to think about is satellite infrastructure for the internet is not the most optimal thing to do. All right.
Okay.
I mean, Facebook already invested heavily. Google did the same thing. The reality is one of the best conduits of internet data packets is water.
Or Wi-Fi. Have you heard about that?
Yeah.
Like, as long as there's a light anywhere in your house, you have a connection. I was like,
So there's light wave connectivity. There's scalar waves that can do this. Water is a great conductor of information. Actually, the best one. It holds all the DNA of the universe in it, believe it or not. So there's that. And then you have things like paramagnetism. So there are paramagnetic methods where you could have an intranet node that's not connected to anything else, but by permission it can. Okay. So you have a truly decentralized infrastructure. So all of these things are being developed as we speak. And I suspect you're going to see a lot more of them in the next 2 years. Big time.
Yeah, I just want to feel safe again. Everybody, it's hard not to get caught up in this politics. I mean, that's what I specialize in. And I get in there and I give people my opinion. But I do see what's going on with the Great Reset. I was telling everybody years before they even came out, I said, everybody needs to pay attention to this Great Reset that's coming out. And people are like, what are you talking about? I go, how do you not know about this? Because this is a bad situation. But now more and more people are starting to say the name Great Reset, and they're starting to really wake up to what's really going on. But I agree, like you said earlier, we are slipping through their grasp.
Yeah, I mean, look, you're right, and I would never get up and tell people how to invest or how to live their life, or I just wouldn't do it. People will figure it out. Yes. People aren't stupid. They're not nearly as stupid as the elite take them for, the so-called elite, I should say.
Well, I agree with that 100%.
Those days are going away. And I'd also say that a lot of the people that we interact with that may have a lot of money or resources or a combination of both, a lot of them are looking for a different path too. They know that the system that benefited them now is not sustainable, and they're having they're having their own epiphanies, so to speak. So let it happen.
A great awakening. Now, I think that term is being used too much, but I do think there's a spiritual awakening more than anything else that's happening right now.
Yeah, I think that's well, Gunther. I'll tell you what. This has been an enlightening in many ways. We're ending on a little different note than we started, but what a great way to end. It's been so great being here with you. I hope you've enjoyed us as much as we've enjoyed you.
Thank you. Yes, of course. Thank you for having me on. I don't do this stuff a lot, and it's great to just have a conversation. Just know that a lot of great stuff is happening, and as long as you are prepared to take care of your own life and your own fate, you're fine. You're going to be fine.
Gunther, thank you so much.
Gunther, appreciate having you here.
God
Thank
bless,
you.
guys. Thank you.
All right.
Thank you.